Good afternoon and welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at MarketSite, we have Frank Chaparro. He's a reporter over at The Block and one of my favorite go-tos when it comes to cryptocurrency reporting. Thank you as always.
Thank you so much for having me again.
In your busy schedule for joining me, and I'm excited about this topic, cryptocurrency bear market. It makes sense. And I happen to agree with you here. There's a couple of points that you had pointed out on social media, starting with ICOs, they need a reality check.
Yeah, I think, given that it's consensus week here in New York and you have folks coming in from all over the country that are in this space, that's the sentiment. I tweeted about it a couple of weeks ago, but the sentiment is true from the folks that I've spoken to. And we can start with the first thing, which is education, right? 80-some-odd% of Americans know what Bitcoin is, but a lot of these people don't know the difference between Bitcoin, cryptocurrency, how is Bitcoin different from cryptocurrency? And so from an investor perspective, that knowledge gap also exists on Wall Street still. Now, to your second point with ICOs, I mean, the writing has always been on the wall. Jay Clayton, the SEC, he's made it clear many, many times, dating all the way back to even the boom at the end of last year. Most of these things are securities. He once even said that I've never seen an ICO that isn't a security. And so what's happening now is we've seen two of these token projects get fined by the SEC for issuing unregistered securities, and you're probably going to see more of that. We had a legal professional write on our site a couple weeks ago, Stephen Paley, how it's sort of, the letters are similar, right? And so his impression was you're going to see that indicates that it's a framework, right? And you're going to see more of these actions happen. Some estimates are 90%, 95% of these ICOs are actual securities. And what a lot of these token projects over the last year have tried to do is, play games of semantics. And I think we've talked about it before on the show. We're not an ICO, we're a utility token. It's not an ICO, it's a token creation event. But at the end of the day, if what you're issuing looks like a security, then it's a security.
Well, I also think the problem is, and with people that I've been interviewing, whether it's a blockchain space or cryptocurrency, there's kind of that come to Jesus moment where they're accepting the fact that institutional adoption is way slower than expected, and there are legitimate reasons why.
Yeah, there are, because you don't have that foundation, right? We have a lot of announcements, but we haven't actually seen these things go live. I mean, from across the gamut, pushed back their launch date from December next month to the beginning of next year. You look at Fidelity, that's not going to happen. Fidelity obviously announced their broker services and custody product. That's not going to happen until next year. You have ErisX, not going to happen until second half of next year, another institutional cryptocurrency exchange. You have Nasdaq, which was supposed to launch futures last year, still figuring out. They're probably going to go for next year with the help of Van Eck. So we haven't seen those platforms. Not only have they not launched, but we haven't, obviously if they haven't launched, they haven't proven themselves.
Right.
And so the question is, even with that infrastructure in the works, who knows what it will look like when it's actually live, right? So much fanfare around CME, CBOE futures that brought the coin up to 20,000. But what are the volumes at now? Not that different from where they were 6 months ago and at launch.
And the thing is, pushing it to 2019, even if it goes into 2020, that's not necessarily a bad thing, right? Main Street does not understand this. The regulators and people that make up this industry market structure are responsible for investors. And maybe until these get ironed out and the chips fall where they lie, maybe it's not such a bad thing to delay them. So not that it's not going to happen, it's just early.
Yeah, I think that it's not only not bad, but it also makes sense, right? These things don't happen overnight. And when you think about how fast the market structure has developed up to this point, it's really impressive. And there's so many unanswered questions hanging over the space. A lot of these exchanges that make up a lot of volumes don't have proper market surveillance capabilities in place. Nasdaq's partnering with a lot of them. I think 4 or 5. You have Gemini, obviously was one of the, I don't know if it was the first, but it was definitely the most talked about. And Cinnabar, which Nasdaq is set to acquire, they're working with a lot of exchanges on market surveillance, but it's not done yet. So that's just one piece of the puzzle, and there's tons of others, spoofing, wash trading. Until these things are figured out and the exchanges actually tackle them, you're not going to see things like an ETF, obviously, and you're not going to see traditional investors get into the space because there's so many headaches that come along with it. Like when I'm an investor, I'm thinking about how am I going to make a trade that's going to deliver alpha for my fund or whatever, or for my LPs, et cetera. But if I have to worry about whether there's wash trading going on the venue that my orders are getting routed to, or other issues, it just adds a level of risk. Investors already take on too much risk by picking winners and losers in whatever market they're in. You can't double down on that risk unless you're really, unless you're one of these crypto specific funds. It just doesn't make sense.
Well, I certainly think patience is a factor here, and there's a couple reasons for that. I think people were so excited about the technology and in a different asset class, right? As people are looking to do something besides equity and bond trading, and
when the volatility was super low.
But see, the problem is that they also have the expectation of evolved, mature equity and bond market structure. It's not a plug and play thing.
Yeah.
The concept of a decentralized system, it's not a plug and play.
Yeah, totally.
And I think that's part of the issue as well. I also think another big part of it, and we've spoken about this before, it's a very, very fragmented asset class. And I think that there's going to be a couple of digital assets, cryptocurrencies out there that will eventually fall off the map.
Yeah, totally. And when you look at, aside from the cryptos that trade themselves, across the landscape, you're going to see a shaking out, whether it's exchanges or some of these firms that serve as the pipes and plumbing. And a lot are under pressure right now. Like, the bear market is real, and it's translating into job cuts at a lot of firms. It's translating into a lot of issues in terms of you had these companies, right, that at the end of last year were just growing, building, without any constraints, because they had so much money sitting on the table from the boom. And now here they are, we're down 80%, and they've got to figure out, and some haven't, and some are struggling, where do we go next? And as far as exchanges, you'll probably see consolidation. As far as trading firms, some, we reported at the block, there was one in the UK, B2C2, that was looking for a buyer. Noble International, the OTC technology provider, that, was looking for a buyer over the summer, right? So there's a lot of, at the same time, while 2019, we have a lot to look forward to in terms of institutional platforms coming online, there is a lot of pressure on some of these firms across the space.
Right, so what are you hearing? Are people staying on the sidelines until this technology is worked out and the infrastructure is worked out? Or is this a buying opportunity, if you will? I still think there's a little bit of a way to go.
There is a buying opportunity. I've talked to some crypto hedge funds that see the next 6 months playing out. You're going to get a lot of distressed opportunities, getting to buy things at really, really cheap valuations, which, looking at what this technology could do and what some of these cryptos could do, that could be an opportunity. When we think about folks that are miles away from this space, regulation is going to be huge. They want Jay Clayton to say, all right, Ripple is a security or not a security, or XRP, excuse me. Right. I don't want them to jump down my throat. But they need that level of clarity because it's such a wild space. And until that happens, you won't see big firms jumping in.
All right. Well, we look forward to having you back for many updates, I'm sure.
Thanks.
Thank you so much for joining us.
Yeah, no worries.
And thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.